Hi there. There are three ways I track success in my life. The first is the number of passports I have. Second is my Uber rating. And third, you guessed it, credit score. So for today's video, I'm gonna talk to you all about how I got a credit score over 800 and how you can too. If you are new here, hi, I'm Prince Jules NYC. I'm a 26-year-old YouTube sensation from Brooklyn, New York. Thank you for watching. Make sure to hit the subscribe button. And if you like this video, make sure to hit the like button as well. It doesn't cost you anything, so why not? Okay, so you might be thinking, why should I even care what my credit score is? I have no idea what it is, and I honestly don't really care. Well, lucky you found the video today, because I am here to tell you that if you're ever thinking about renting an apartment or buying a car or buying a home or applying to a job, you should pay attention, because credit score is something that a lot of companies and financial institutions use to determine how trustworthy you are. So you definitely should not only know your score, you should be paying attention. Your credit score can not only impact those benefits like things you can qualify for, it can also impact how much money you spend on interest. The higher your credit score, the lower interest you'll pay, and the higher the amount of money you'll save long term. Understanding and boosting your credit score could save you potentially thousands, if not hundreds of thousands of dollars in your lifetime. It really is a no-brainer, and the great thing about credit score is you don't need to spend any money in order to improve your credit score. There are 3 credit reporting agencies that collect all of your credit information, so like any monthly payments, missed payments, any information that then goes onto your credit report. And your credit score is a score that takes some of those crucial pieces of information to kind of rank you and say how trustworthy you are within a range of 300 to 850. 850 being the highest and 300 being the lowest credit score you could get. So before we even delve in deeper on what the components of your credit score are and how to boost them, I would go ahead and even check what it is right now. So there are 2 services I use to check my credit score, and you can do this on a daily basis, however frequently you'd like. One is called Credit Karma, and the other is called Credit Sesame. It doesn't really matter which one you use. Actually, I use both since they're both free. I would start there just to get a baseline of where you are before we even jump in any further. According to Experian, which is one of the credit reporting agencies, anything above 800 is considered excellent. Anything from 740 to 799 is very good. 670 to 639 is good. 580 to 669 is fair. And anything below that is considered poor. So you want it to be as high as possible. Typically, what most financial experts agree on is anything above 760, you're kind of in the sweet spot for qualifying for the best interest rates and the best deals. For the longest time, I've hovered around the 700s. And for the first time, and which is why I wanted to make this video, I crossed over above 800. And so let's talk about how I did that. Typically, it's a longer process to be able to boost your score. I was able to go from about 748 to over 800 in 5 days with one simple change I made. I'll talk about that kind of down the line as we go on. Let's jump into the 5 major factors that impact your credit score. So like I said, 5 of them, the first and most important of which is your payment history. So like I said, the reason for even having a credit score is for lenders to understand how trustworthy you are. So obviously, if you're not making payments, that's going to be a huge ding to how trustworthy you are for future loans. So it's for landlords to understand, is this person safe to rent to? It's for banks and lenders to understand, can I safely lend out money for a home or a car to this person? And what does that risk look like? So the first factor, payment history, that accounts for about 35% of your credit score. It is crucial to make every single payment on time, particularly if you're new to your credit score and your credit report. Missing one or multiple payments can have a huge ding on your credit score. best practice, make a payment every month. Typically, there's a minimum payment that usually is about $35 to $40. You have to make that payment every month. A late payment lasts for 7 years on your score. So if you miss a payment on a loan, that can have a huge ding. Don't do it, it's not worth it. Payment history, there isn't anything short-term you can do to boost that. So really just always pay on time, always pay at least the minimum on time every month. The second largest piece of your credit score is your credit utilization, and this accounts for 30% of your credit score. So not that much different as payment history, slightly less, but all important all the same. Credit utilization refers to the amount of revolving debt that you carry. So this especially means your credit card payments. When you qualify for a credit card, you'll usually get a credit limit. So let's say that limit is $500. If you go out and spend $500 with that credit card, you've used 100% or you've maxed out your credit. So your credit card utilization would be 100%, and that is a big no-no because what that tells lenders is this person is at risk. They're currently using all of their available credit. Think twice about how trustworthy they are. So for this, you want to minimize how much debt you carry, especially as it regards to revolving debt like seen in credit cards. How I've been able to be strong on this mark is I don't carry a balance on my credit cards, period. So if I spend $200 on my credit card, I pay off the amount that's due at the date that it's due entirely. So I'm not paying off what could be the minimum payment, which maybe is $35 per se. And having that balance, I pay out the full thing. And that's what I'd recommend if you can. One, because it helps your credit score, and two, because it's cheaper. When you keep a balance, you're actually then paying interest, and so it costs you more in the long run as opposed to just paying things out straight away. If you're not able to pay your credit card balance off every month, I would keep that debt 30% or below. So 30% or below is more considered a safe zone. So if you have that $100 credit card limit, you should never have a balance that's more than $30. For credit utilization, a couple things you can do to boost that right now. One is asking for a credit limit increase. This is something that is actually surprisingly very easy to do depending on what credit card you have. Depending on the bank, if you just give them a call or go online, there are very quick ways to ask for a credit limit increase, and often you'll be able to get an answer right away. Or if not, you'll get an explanation of why. Now, when you're requesting a credit limit increase, make sure they're not doing a hard check on your credit so as not to impact another factor I'm going to be talking about in a second. So, credit limit increase. The second is applying for a credit card. Now, obviously, I say this recommendation and take it with a grain of salt if you have issues with controlling your spending on credit cards. This recommendation is only for people who are disciplined and in control of their spending on credit cards. If you have that issue, I wouldn't recommend adding more credit cards because that could just make the problem worse. Adding another credit card would not affect the amount of debt you already have, but it would affect the credit limit that is available to you. So if you have a $100 limit from one credit card company and you get a second credit card with another $100, then you have a total available credit limit of $200. Whatever that portion of debt that you carried would then be a smaller portion of the credit limit that's available to you. So those are a couple ways to hack your credit utilization ratio, is asking for a credit limit, and two, applying for a new credit card. But the other thing I'll say is make sure when you're applying, if you have a poor credit score already, you may not qualify for all credit cards. So be very cautious about applying for credit cards that you feel confident that you qualify for. The third factor that impacts your credit score is average length of credit, and this accounts for 15% of your credit score. Now, I have seen instances in credit reports where it says just the overall length as opposed to the average, but regardless, I would still make sure to take into account all of your credit cards and make sure that your oldest line of credit is kept open just to make sure you still have that. and to just be very cautious about opening too many new cards in the short term, as that will pull down the average. This one is a little bit hard to control because it's only a matter of time, and just the longer you're in the system, the better you'll get out of it. So if you do not have any lines of credit or credit score right now, make sure to get in. The sooner you can get in, the better it is for you, at least for this factor. One strategy that I would look at is piggybacking. So if you have family members or parents with good credit scores, consider them adding you as an authorized user. Obviously, they would have to trust you, and you might see that their average length of credit boosts yours. It doesn't seem to happen in every case. I know it happened in mine, where my dad, because he had a longer history with having credit in the US, boosted my credit score initially. The flip side of that is if there are any areas where they have dings on their credit score, that could also affect you. So make sure to just think about that as you make a decision on whether to be added to someone else's account. The reason I noticed that I went from 748 to over 800 in a short amount of time is that I was getting boosted by my dad's average length of credit because he had a longer history, but I was getting dinged because he had a high credit utilization ratio. So on one hand, I was being pulled up by that length of credit. On the other hand, I was being pulled down by having too high of a ratio. And when I got taken off of my dad's account, boom, in 5 days, it went from 750 to over 800. So that's something I would definitely consider, and make sure to think about all the factors. Is this person helping in one area but potentially pulling down your score in another? Just make sure to think about that, and when you look at your credit score and your credit reports, you'll see specifically what are the opportunities and what are the things you're doing well at. The fourth piece that affects your credit score, and I alluded to this earlier, is hard inquiries. And what this means is any hard checks on your credit. So if you're applying for a loan, or if you are applying for a credit card, that results in a hard check on your credit. Companies don't want to see you having too many hard checks at a time, because it signals like, why are you applying for so much credit right now? Is everything fine? So what they typically look for is no more than about 2 hard inquiries, and the inquiries last about 2 years. So the best practice is no more than 2 hard inquiries in a 2-year period. Now, it is only 10% of your score, so if you think having more inquiries will boost your utilization, that's something to consider. But in general, minimize the inquiries as much as you can. And then the final factor that impacts your credit score is your account mix. Lenders want to know that you are able to manage different types of accounts. So things like student loans or a car loan or credit card. They like to see kind of a variation. This isn't a call to go and then apply it to 10 different types of loans. That is absolutely not what I'm recommending here. But and this is a factor that as you grow older and as you apply for these loans, that will naturally go up. So that isn't necessarily something I would change or try to fix in the short term, unless that's something you actually need. The other piece, and one of the reasons I love Credit Karma and Credit Sesame, is they both have simulator tools. So you can see with different adjustments in utilization or average length or hard inquiries, how that could potentially impact your credit score. It's not an exact science in my experience, but directionally it can give you guidance on what decisions you should make. So overall, the areas I'd recommend looking into if you're thinking about improving your credit score, looking into getting a credit limit increase, applying for new credit if you're disciplined and you know that you'll have control over that, thinking about piggybacking or being added as an authorized user, and the obvious paying on time. And then after that, it really is a matter of timing. So just the longer you stay in, the better you'll see things grow. If you found this helpful, like I said earlier, make sure to hit the like button and subscribe, and let me know if you want to hear more about finance. I love talking about finance. Let me know if you have any specific questions around it or want to dive into any specific topics. Otherwise, I will see you on the next one. Have a lovely day, everyone. Bye.